Hey traders from around the world, what's going on? It's Ricky Cadan from Real Life Trading Australia, back again with another free real life stock review. And last week I was unable to do the stock review on Thursday for you guys because my wife was actually having a baby. So we welcomed into the world young Levi Jeremy Cadan. There's a picture of him right there. So super blessed, super happy. Both mum and bub are doing absolutely amazing. So that was the reason why I was unable to get you guys a stock review, but I'm back and I am ready to absolutely crush the markets with you guys. And the markets had a little bit of a tumble. Obviously, on the back of the news with the tariffs and China, devaluing their yuan, sorry, and markets generally do not react very kindly to news like that. The last time China actually devalued their currency was back in 2015, and ironically, it was also back in August. So I'll just go back here on the chart, and it was actually back here on, I think it was the 13th or 15th or around here anyway. And as you can see, we did have quite a bit of a pullback. The market did recover, and it did take a little bit of time, and there was a lot of volatility back then. So I do expect the volatility to stick around for at least another month or two. But if I just go back to the SPY where we are today, and yeah, I mean, we pulled back then, we pulled back about 10%, and here we've pulled back roughly, about 6%, and then slowly starting to bounce. If you take a look at the E-minis, the ES, we did actually come back down to the 200 SMA on the daily chart, and we did have a cute little bounce. I don't think this is going to be a V bottom, although it could be, but most likely what I do expect is the SPY to kind of just maybe come up a little bit, chop around, maybe create another lower low, and maybe bounce off these support levels back here, getting a few bears trapped as people think that the market is just going to absolutely collapse. So from here, we could honestly just completely bounce straight out of here, but me personally, I think that most likely we will just kind of come up a little bit, trade down, and then slowly grind higher after we buy the dip. Here's the Qs, and Q is pretty much doing the same thing as the overall markets. We are currently in between the 100 and the 200 simple moving average on the daily chart, and we have got a cute little bouncing candle right now. And here's the IWM, which came straight back down to this support at 146.80 and thrown in some glorious hammer action. So this looks really good, guys. We do need to hold this support level, otherwise we most likely will go lower. So from here, guys, most likely we do expect it to come up a little bit, maybe come down, get some people trapped, and then look for a bounce. And if we just take a look at the VIX, so history tends to repeat itself. So if I just zoom back here, so since 2018, we've had one big fall here, and then another big fall here, and another big fall here, and then we're having another one here. So back in 2015, when we last had when the China last devalued their currency, we had 1, 2, 3, 4 moves, and then straight after that, guys, the VIX was pretty much just flat, and this was when the market just rocketed higher. So it will be quite interesting to see how this market reacts over the next coming months, but personally I expect us to probably chop around here a little bit, maybe come up a little bit higher, and then come back down, and then slowly fizzle out. Let's take a look at a couple of trades. So there are some great opportunities out there right now as the market has been going bearish, and there are great dip buying opportunities. Here is Amazon, the giant of the e-commerce. coming straight to the 200 on the daily chart, throwing in some amazing hammers yesterday, or sorry, today. And I mean, it is a great level to buy. We have pulled back from these current highs. We have pulled back, you know, a good 13%. So you're not going to be crazy to be buying down here. We could obviously go a little bit lower. If you take a look at the weekly chart, you know, we did gap down on the weekly chart as well. If we do come back down, personally, I think we'd only probably come to about the 100, which is about the, you know, $1,600 level. And at that point, I would be looking to put a sizable position on Amazon. But right now, if you are looking to own some shares in Amazon, you could always look to pyramid in. And by that, I mean buy a little bit here, a little bit more here, and then probably buy a lot more down there. So Amazon, looking to buy the dip, great dip buying opportunity. And here's Uber. So Uber, we actually spoke about back here, saying that it was actually on this big bearish candle here, saying that most likely we are going to trade higher and then go lower. A lot of real life traders taking advantage of that particular position. We did get into put options up here. So well done to everyone who did get into put options. Right now, yes, as you can see, this is a very volatile candle, a lot of long wicks, and just look to take profits, guys. Obviously, we could go lower, but if you are in those puts, I'd probably look to close them out. Here's AMD. Now, AMD, I gave the analysis after this beautiful gap and go. I did give this analysis before the market opened, well and truly before the market opened, saying that most likely we will get a very bearish candle like this one, and we did crumble lower, and we are currently below the 100 on the daily chart. Take a look at the weekly chart. You know, still a little bit extended. I am still very bullish on AMD. I don't think we go a whole lot lower, although if we do, I would be looking to acquire some more shares down here at $25, as it is straight off the 200 on the daily. So AMD did have a gap up, and it was a bearish candle gapping up, so it should have been a gap and go, although most gaps today, you probably noticed that we did gap higher and then they just faded back down. So that was also the case on AMD, but most likely we will just chop around here, maybe create another lower low, and then look to buy the dip on AMD. Here's Apple, and Apple at a beautiful level right now, right at the 100. We did have a retest gap 2 days ago, so we are just currently retesting. Now, we also have a cute little inside day bullish candle. So from here, we could break any which way, to be honest. Most likely, if we gap down, we're going to trade down to the 200 at least. And if we gap up, we will most likely fill this gap and then roll back down with the rest of the market as we do come back and retrace a little bit. So there's Apple, guys. Obviously, we are getting some really good dip buying opportunities at this point in time. So I'm still long on the markets. I do not think that we are going to completely crumble just yet. Here's Shopify, and I mean, if you haven't got shares in Shopify, I know it would be hard to be buying up here because this is a very high level. Pretty much, you want to be looking to just maybe sell some premium, sell some put options down here, and then just hope that you get filled, because that would be a very good time to own Shopify. It is very hard to be buying at the top. Everyone wants to be buying on a dip, and I am obviously asking myself every time I every time I look to buy Shopify, it's always, you know, right here, and I'm just like, okay, yeah, maybe I'll wait a little bit longer, and it just keeps going higher. So Shopify, guys, is absolute, you know, bullish machine. This thing is unstoppable. Obviously, at some point, we will get a retracement because on the weekly chart, now that is sort of cute little evening star reversal. I don't think if we close below this candle on the weekly chart, I do expect us to come back down to about 281. But Shopify still bullish. Keep buying the dips. I did say that most likely we will chop around here, for a little while, and that's exactly what is happening on Shopify. Here's a day trade to look out for tomorrow. So Disney reported earnings after hours, and we had a beautiful, beautiful bullish hammer candle with insane volume today. So this just tells me, guys, that there is a lot of people trapped. If you take a look at the 5-minute, you can see that pretty much everyone was just anticipating a really great earnings report, and pretty much anyone who bought from pretty much midday or the first couple of hours in, all these people are going to be trapped after this big gap down. And right now, we are currently gapping down to about 136. If I go back to the daily chart, okay, and I'll just put on some short-term moving averages. We're below the 50, okay? We're below the 50, and we are gapping down below. We are gapping down below this gap right here, and the 100 is right here. So definitely keep your eyes open for a bearish gap and go. It is a perfect gap and go, and I do expect this probably to trade down to the 100 at least tomorrow. So there you go, guys. Disney, keep your eyes on a bearish day trade tomorrow. Here's the All Ords. Now, the All Ords obviously feeling a bit of the heat from everything that's been going on in the global economies. We did get a decent size pullback, and ironically, we pulled straight back to the 100, and we have got a nice little bullish candle. I do not think that we just bounce straight on out of here, guys. Most likely we will chop around here sideways like the rest of the broader markets, and then I'll look to buy the dip on the All Ords. But All Ords definitely looking good for a short-term day trade if you are day trading the All Ords. Here's ANZ. ANZ gapping down with the rest of the markets straight to the 200 and bouncing. Beautiful time to pick up some shares, or 1 or 2 shares. And honestly, this is just a healthy bounce, a healthy retracement. Market has been quite bullish, so this is a really good time to own some more shares if you are looking to own some bank stocks. If you take a look at CBA, also gapping down today to the 100, and great, and we are bullish, right? So we are bouncing here. So most likely we probably will bounce up, chop around, and then slowly grind higher. BHP, now BHP obviously pulling back with the broader markets, but not only that, iron ore futures did drop about 30% as well, close to 30%. So obviously BHP, being an iron ore company, are feeling a little bit of that heat as well. But we are right now at the 200 on the daily. So this has been a really nice level to go long. As you can see here, 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 and here. It doesn't stay below the 200 for very long. So if you are looking to acquire some shares, this is definitely a long-term position, not short-term. This is a long-term position and a long-term place to buy and hold BHP. Another big mining giant, FMG, Fortescue Metals, having a decent pullback. I did say back here, guys, start locking in your profits. And if you did, here's a really good time to start buying again. Here's a good time to start getting into some more FMG shares, as this is a previous, support level to a previous resistance level, old support, new resistance, old resistance, new support, and we are also at the 200 on the daily. So great time to buy FMG. We did have a decent pullback of 30%, give or take. So you are not buying at an all-time high. Very good time to go long. Here's Afterpay, APT. And I have been saying that most likely we will consolidate around this level and most likely chop around here sideways for a little bit. So if you are looking to acquire some shares, great time to be buying down here. $20 is a really great buying location. That should coincide with this 200 on the daily if you are looking to buy some APT shares. Here's Telstra, ticker symbol TLS. So there was a gap down the last couple of days, and my target still is 427 for a proper pullback. So most likely Telstra will just slowly grind sideways and trade up to 427, and then we'll see what happens. Most likely have a little bit more of a dip buying opportunity, and then we'll reassess the market then. Let's have a look at some commodities here. So here's oil. So back here, guys, I was saying that we will most likely come back down, hopefully to at least 55 or back down to these levels here at 52, 53. And we are right here right now. So if you are looking to play oil, I mean, we are still in this little wedge and we're right at the bottom here. So we could break down, by all means. We could definitely break down with everything that is going on over in the global markets, but I would personally be looking to buy long term here if you are looking to own some shares in some oil companies like Santos in Australia or BP in the States. Now is a good dip buying opportunity as oil is getting quite cheap. If we do continue to drop, my target would be around $43. That would be an amazing time to buy and go long, and that would be a very sizable position as we do not come down this low very often. But US crude oil, definitely a buying location right now, and just look to buy the dip. Here's gold. So finally, this was the pullback after we had this breakout of this little wedge. I said that most likely we will do something like this, and here it is, guys. Predicted well in advance. Gold, here's that first push. So most likely, I do think if you can take a look at the weekly chart, okay, there's not much resistance in the way from now on until about 1560. So I do expect us to trade up to 1560 and then most likely come down, have a bit more of a retracement, and then probably go higher. Gold is actually quite interesting, especially with what's going on in the global economy. Gold could continue to make all-time highs eventually, but we still are in a wave 3, right? So realistically, this is a wave 1, wave 2, wave 3. We could come all the way up to 15, maybe 1600, create another dip buying opportunity, and then continue higher. I will be looking out for that, but definitely I have always been saying be long on gold. Now is the time to go long. Obviously, if you did buy on that dip back here, that was a great time to buy. And I hope you guys, probably now is not the time to buy if you are looking at getting into gold. I would just keep looking to buy the dip on gold. But definitely looking really, really great. Here's the dollar index, a DXY. And we did come back up to this resistance and fail again. It was a little bit of a fake out. And right now, we are going a little bit lower, which makes a lot of sense because gold is going higher. Here's AUD USD. So we have been speaking about this going to 65 cents eventually. I've been talking about this since this day back here, saying that most likely we'll come back up to the 200 and then trade lower. That's exactly what has happened. So from here, guys, if you are in the US and you are looking to create some sort of Australia fund, you've never been to Australia, you would like to eventually go to Australia, you could, okay, invest in a stock called XDA, right, which basically just tracks the Aussie dollar. So you could potentially just put some money aside here as a small little, okay, you know, as the US dollar increases, so is my XDA. And if you take a look at the weekly chart, like now it is a low level to buy, and this is the reason why most likely we will come down to about 65. This is where I'll be looking to go long, or looking to buy some long-term call options on XDA. So Aussie dollar still dropping as expected, and keep an eye on it. If you are looking to short AUD USD, here is your support level right here. I would wait for a retracement back up to this level and then look to short these highs again if you get that opportunity. That's all I got for you today, guys. Hope you enjoyed this review. I'm back again, so I'll be back again on Thursday with another real life stock review for all you guys. And if you want me to review any tickers, leave it in the comment section below, and I will put it in my next review for all of you. Thanks again, and remember, love life, live life, and trade it. I'll see you soon. Bye.